Starting now, Equity Mates, with thanks to our mates at Spaceship.
Welcome to another episode of Equity Mates. It is that time of week again. It is Wednesday and I am joined by my equity buddy Ren. And what does Wednesday mean?
It means Watchlist Wednesday, Bryce. The best time of the week where we get to sit back, relax and listen to an expert investor talk about some stocks on their watch list.
Yes.
This week we're also hearing about some stocks not on the experts watch list.
Yes, and we will start with them, but it is our pleasure to welcome Julia Lee from Berman Invest back onto Equity Mates. Julia, welcome.
Great to be here. Thanks, guys.
So, as Alex said, we traditionally keep this to 3 stocks that are on your watch list, but today, Julia, you snuck in a couple that you have your eyes on for other reasons, and I think we'll start with those. And those 2 stocks are Baby Bunting and A2 Milk. What is going on there? Why are they not on your watch list?
I guess, Bryce, when I look at different stocks, often what I'm looking for is an underlying trend, whether it's a structural trend or a cyclical trend. And this one, I guess, is the baby trend. I'm sure during lockdown and COVID-19, all of us know probably someone who's had a baby. So there's lots of stories around us of people having babies, and it may feel like we're reducing a lot of babies, but in fact it's been the opposite and the birth rate has been declining. Not only here in Australia, but a lot of major economies like China, Hong Kong, a lot of the European nations as well. So I guess the big question is, how does that impact on individual stocks? Now, I try to think about the birth rate a little bit more because I was finding it a bit confusing because there are quite a few people around me actually having babies. And I thought about it, I thought, it's those couples that were already together intending to have babies that are probably having the babies because they had the time in lockdown. But what if you were a single? There's been less opportunities to meet other people in places like bars because during lockdown, you actually had to sit down at a table, you weren't allowed to carry your drink around and mingle. Now, some of those conditions are lifting, but over the last year, it does look like the birth rate has been quite low. And in fact, what COVID-19 has done is it accelerated that trend that's already been present, that in a lot of the advanced economies, the birth rate has been declining and fertility has been declining as well. So look, Baby Bunting has been reporting well, and actually the share price has been doing extremely well. But given the risks of that birth rate, I wouldn't have it in my portfolio at the moment. The same with A2 Milk. You might see that debut channel starting to open up. But the risk there is that the market has shrunk and more competition in that space. So they're 2 stocks I'm avoiding for the time being.
It's an interesting structural trend, I guess, to keep an eye on. Yeah. But we don't want to dwell on the negatives here at Equity Mates. We want to move to the positives. So let's move to some stocks that are on your watch list, starting with one of Australia's biggest companies, BHP. So most people will be familiar with BHP, but why is it on your watch list?
We're the best diggers of dirt in the world, and what better mining company than BHP Billiton? Look, it's not the most outrageous stock out there, so I guess I want to outline why I do like BHP. First of all, when we look at things moving in cycles, I think that cycles do tend to go for much longer than what people anticipate. And there's lots of calls in the market for iron ore prices to be coming back to sort of 90 US a tonne. But in actual fact, we've seen the opposite, and iron ore just has gone from strength to strength despite some of the environmental controls that China has been imposing in its largest steelmaking city. So iron ore prices have hit over 190 US a tonne, and when you're producing at about 14 US a tonne, you're making stacks of money, which BHP Billiton is. Now, most of BHP Billiton's revenue and earnings does come from iron ore, but quite a significant amount also comes from copper. And the reason why copper is exciting is because of electric vehicles. We're seeing decarbonisation being a huge theme at the moment with Biden's Earth Summit, as well as many countries around the globe agreeing to a certain date to not sell petrol-based new cars from. So electric vehicle uptake is much stronger than anticipated, and that will probably accelerate. The reason why that's important when it comes to copper is because electric vehicles use about 4 times more copper than petrol-based or gasoline-based vehicles do. So your normal petrol-based car has about 20 kilograms worth of copper in it. A hybrid car has about 40 kilograms. And then an electric vehicle has about 80 kilograms of copper. So I think it's pretty exciting to be in copper at the moment, not only because of electric vehicles, but also because of the charging stations as well. So as you see the infrastructure for electric vehicles being rolled out, that will also add to additional demand. Now you might ask yourself, well, is it just copper that's going to be used in electric vehicles, because copper prices have been rising? And I guess the nearest substitute for copper would be aluminium, which is 3 times cheaper, but it's also less efficient and less good at transferring electricity and transmitting electricity. So look, I think copper is going to be a big winner, and of course iron ore prices for the time being are relatively high. So BHP Billiton, when it comes to August reporting season, I think it's going to come out with another bonanza in terms of dividends being paid.
Bonanza. So looking forward to
A BHP bonanza.
BHP bonanza. Love that. So Julia, we'll move on. So we've had BHP. The next one is Fletcher Building or Builders. FBU is the ticker. Why is Fletcher's on the list?
Yeah, we know that there's building boom going on. And look, Fletcher Building has been one of these companies that has just been a basket case for years and years and years, probably the best part of a decade. And that's because a lot of its old work used to be around project work where, you ran into some troubles. And when you are doing project work and contracting work, it's very important that you're able to maintain margins, which can be quite difficult to do as a project rolls on. But it's left those problems behind it. It's divested a lot of businesses. It's done a lot of cost cutting. And at the moment, it's all about the recovery in the New Zealand economy, as well as the residential side of its business. And the residential side of its business is responsible for around about 50% of revenue. So there's a bit of a building boom going on, given what's happening with house prices in Australia and New Zealand. In fact, if we have a look at the December quarter over in New Zealand, it saw a record number of dwelling consents, so the approval to be able to be building residential buildings. And over here in Australia, of course, we've seen Home Builder, which has really helped to light a fire under the renovation market and the construction market. And we've just heard an extension for that an extension of 12 months to the construction period related to Home Builder. So look, this one's in an upgrade cycle. I think the major risk here is that you see some of that government support being taken away, but for the time being, I think the next report should be a very positive one, and the outlook looks pretty strong for the next 12 months as well.
So Julia, this is a stock that's right in the middle of a good cyclical upswing. You know, you were talking about building approvals, and also house prices are rocketing up, and the property market is hot in Australia and New Zealand. How do you think about investing? How do you avoid investing at the top of a cycle though? Do you think this property trend has a ways to play out? And what would some of, I guess, the leading indicators of this cycle maybe slowing down or maybe reversing be?
Sure. I know that the property market, it's a really good question. And I know that the property market has been really hot because of auctions and things going on. So I guess that also helps to stimulate the renovations market. And I think the renovations market is actually going to be stronger and longer than the property boom. And that's because of housing affordability. If you're in a place and you want to move, but places are just so expensive, the next best thing is to renovate on your own property and do construction and extend to what you need. I think that's what really we're going to see in terms of the housing boom, because house prices have rocketed up. So you're absolutely right that I think house prices will be mean reverting. So we are looking at a boom at the moment, but that probably means for the next 5 to 7 years at least, we'll probably see underperformance in terms of house price growth. But because of housing affordability, I think it means that the renovations market and the construction market will be much stronger than, I guess, the sort of boom and moderation that we're likely to see in house prices.
So Julia, moving on to the third and final stock is Iluka, ticker is ILU. What is your thesis for this one and why is it on the list?
Well, this one's kind of related to the housing boom as well, because Iluka looks at titanium dioxide, which is used in paints and pigments, which of course if you're painting your house, there's a bit of demand for, as well as ceramics. So look, the housing boom is also driving this as well. But I think the interesting thing with Iluka is it's also moved into the rare earth space. So by about 2025, I'm guessing around about 30% of its revenue might be coming through from the rare earth space. And the rare earth space is, I think, an interesting area because basically all technology uses it, whether it's in our mobile phones or laptops. We need those strong magnets in our technology. So it is a growing area, but China is still responsible for producing more than 70% of the world's rare earths. So it's not as much around, I guess, it's not so much around just the price of rare earths, I think. It's also about supply chain stability. Because in the past we have seen China restricting rare earth exports, and that's sort of led to a mess in terms of supply chains and also in terms of pricing. One of the things I'm watching very closely at the moment is the unfortunate conflict in Myanmar. And Myanmar last year was responsible for 50% of the heavy rare earth concentrates that China then processed to go on and sell. So given that there is a civil war over in Myanmar or a civil situation, just watching that rare earth supply to China and whether there could be some disruption in the short term. So there are some short-term and long-term drivers of rare earths, but for the time being, I guess it's really that home building, home renovation, the construction market that's driving Iluka for that titanium dioxide as well as the zircon.
So Julia, we've covered 5 stocks today, and if I can try and tie them all together, I think we can say that during COVID, people stopped having babies and instead are spending that money on electric cars and home renovations.
You've summarised it well.
Easy. Well, Julia, we thank you for your time as always. It's a pleasure having you on Equity Mates. We know that our community do really enjoy your insight to all these companies and understanding how that you apply these macro trends to your investing decisions. So, as always, thank you for joining us on Equity Mates. We look forward to getting on again at some point.
It's always fantastic chatting with you guys, Bryce and Alan. Thank you.
Thanks, Julia.
Thanks, Julia.
And that does bring us to the end of Watchlist Wednesdays with a bit of a twist there. We had a couple on Julia's watchlist for other reasons than to buy, I guess, which was good to hear. You like hearing the thesis as to why not to touch a stock.
Yeah. We encourage all fund managers to bring a bit of negativity to Watchlist Wednesday if they so choose. But I think 3 interesting stocks to add to your watchlist from Julia there.
Yes, so we had BHP, Fletcher Building, Iluka, and then I guess keep an eye on Baby Bunting and A2M milk. I liked the thesis around the false idea that people are popping up babies.
Yeah, well, maybe you can support Australia.
That's not going to happen.
Get a wriggle on.
That is not going to happen.
But look, we'll take that offline. And Bryce might have news for us one day. But until then, we'll be back tomorrow with another episode of Equity Mates, where we'll be trying something a little bit different. Bryce has been digging deep into the world of platforms and products available to the retail investor. And he's going to give us an update on everything that's happening. It's a common question from the Equity Mates community because it is such a fast-changing space with so many players and so many new entrants. It can often be difficult to know what's out there and what's changing. So Bryce is going to be the man that breaks it all down for us.
Yeah, so it's going to be a short episode and we'll see you tomorrow.
Equity Mates, with thanks to our mates at Spaceship.